managerial accounting, we're focusing on this part of the income statement. Sales minus cost of goods sold gives us gross profit, minus SG&A gives us operating income. And we decided to figure out what it cost us to make our stuff. We got to sort the period costs from the product costs. And we said that any cost inside the factory is a product cost. And that'll be included as part of the cost of making our thing, whatever our thing is. And then those costs are going to flow through our T accounts. And these are always the same. We have raw materials, factory labor, and manufacturing overhead. So we're going to take materials, labor, and overhead. It's going to move into work in process. Then that's going to move into finished goods. And finally, we're going to sell our stuff. And that's when these costs finally hit the income statement. In the meantime, they're all in inventory. Stuff we're going to work on, stuff we're working on, stuff we're finished working on. Finally, we sell it, and now it hits the income statement. Chapter 3 was about job order costing. So if we're building a house in San Lorenzo and a house in Blackhawk, we'd keep track of those jobs separately so we knew how much it cost us to make each house. And the only tricky part about job order costing was the manufacturing overhead. Materials are easy to track. We asked Ralph, he's in charge of our materials over there, how many materials got checked out onto the factory floor. We looked at the time cards, how many direct labor hours went here. The problem is the overhead. That's just a guess. And so we said at the beginning of the year, we'll sit down, take our total estimated overhead for the year, and divide it by our driver. The driver might be labor hours, might be labor costs, might be machine hours, might be kilowatts of electricity. It depends on the nature of our business. Whatever we think is a good factor for determining how much overhead got used on a particular job. And we also said that indirect materials come out of here and come down here. Indirect labor comes out of here and down to here. Indirect materials are things like nails, lacquer, small little things that we're not going to bother to keep track of through Ralph. We're just going to apply them through our overhead rule. Indirect labor are people that aren't working directly on the stuff. So the supervisors or the quality control inspectors, they come down here and their salaries get applied using our overhead application rate. And so that was job order costing.